Welcome to Trading Errors.
That was a really fast, loud gulp. I love
Right.
that.
Yesterday I did a show, our show, without any caffeine. I hadn't had any in hours. I can't do a show without caffeine. You need caffeine. This
You were
stuff
a little dull yesterday.
I was a little flat and a little dull. Today I'm going to bring better to us. This is Trading Errors, the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. Thank you guys for joining us. This is my favorite show to do because the live element to it. Please feel free to ask questions. Feel free to give comments, retweet, tell us how wonderful our hair looks, which, by the way, would have been appropriate 15 years ago for both of us. You should have seen us. We both had good heads of hair. Before we bring in our guests, which I'm very, very excited about, today is an interesting day. Okay. Tulsi Gabbard says that Barack Obama should be prosecuted. She has the conclusive evidence. I'm sure you saw it. Stock market rallies. I was concerned. I thought that would be a big story. Is that a no story?
Which one? What part of it?
That Obama might be getting criminally prosecuted.
Yeah, no, I think that's a non-story.
It's never going to happen, right?
Well, I don't know if it'll happen or not. I would guess that it won't. But I think Epstein was easier to do something about than Obama. But I don't look at it as anything related to the markets at all. I mean, he has absolutely no influence on markets, even medium term, in my view. But I could end up being wrong about that.
No, I just thought there was a chance we'd look a little banana Republic-y, and there could be some fallout from that. But again, we guys, by the way, you guys are watching us. We know the real story today. Well, at least it started out being the agreement we came to with Japan, 15% tariffs. Bobby, you put it eloquently on the rundown. Can you give it to them again why you think it's a big deal?
Yeah, I think, first of all, it's a template for some of the countries who haven't come to the table before the August 1st deadline, largest which being the EU, which, of course, is not a country, but it's a block that we need to have a trading deal with. And then the second part of that is the good part for the U.S. Treasury, as we had 2.5% tariffs on Japanese goods before that we were collecting. Now we get 15. Yeah. And Japan's happy and the U.S. is happy. And Japan is supposedly going to bank $550 billion worth of investment, with 90% of whatever investments are profit going back to the U.S. Treasury. I don't know how I feel about that. That seems a little communistic to me, depending on how that's structured. But, by the way, that reminds me of China promising to buy a certain amount of soybeans and then never really doing it. So I don't even worry about that part of it. I like the trade tensions going down overall. And as you mentioned on the rundown, volatility collapsed on this announcement earlier today. Yeah,
and that's a big thing too. By the way, did you know that we were big rice exporters?
Not to Japan.
No, we export rice. That was part of the thing in there. We export 5% of the world's rice exports come from the U.S.
Right, but I thought, and I could be wrong about this, I thought that Japan absolutely forbid U.S. rice from coming.
Could easily be. I don't know where we sent them to. I just was shocked when I was reading that as it surrounded this sort of headline today. I did not know. Bobby and I have never really been big traders of rice futures. Oddly, rice futures were one of the original futures contracts to ever be in existence.
Yeah, that's
anyway,
true.
Enough about us. You guys, I say this all the time. You might think we're full shit and tired of listening to our opinions, but you cannot question the fact that we get great guests. We have another one. We are going to bring in one of our favorite people, Carly Garner of DeCarly Trading and author of many. I can't even name one of the books because she's authored like 6 books. Let's bring in Carly. You know, with our relationship with Carly, this always strikes me that I'm surprised that you like us. We're obnoxious and we're idiots, and you're polished and sweet and soft-spoken, and you still are our friend. I want to say I appreciate that. Thank you so much.
Well, I appreciate all those things about you guys. That's why I like you.
Okay, well, that makes sense then. I like it too. Did you hear the question I asked about the Obama thing? It's a nothing burger, right? Am I crazy even talking about it?
No, I don't think so. I mean, I think it definitely is something. Let me put it this way. I am a big advocate of never, ever, ever trading based on a political opinion. And I'm happy to witness today that I think probably nobody traded based on that announcement. So that's good news. I think as a broker, I see people make this mistake over and over. I had one trader I was talking to during the Trump 1.0 that was consistently short the market. And we know that the market performed pretty well during Trump 1.0, but he was habitually short because he was waiting for that impeachment crash that never came. So there's lots of reasons to buy and sell markets. Politics probably is one of them. Even something as devastating headline like the one we got today.
So real quick, I want to correct my mistake. The U.S. exports 770,000 metric tons annually to Japan, but it's under the WTO's minimum access framework, and it is steeply tariffed, like 70% tariffs on U.S. rice. Japan's basically forced to take it as part of their
Charlie,
WTO.
you know everything, by the way. You're one of the smartest people I know. Did you know we were a rice exporter before that moment?
I did not. Yeah, I learned something
either.
new today.
Yeah, I didn't
no
either.
idea.
So Carly, I was really excited that you said yes when I asked you to come on, because you're probably, it's between you and Mike Arnold about who knows this stuff better, medium to long term. And I want to know what your charts tell you about gold. I've been long gold since November of 2022. Jimmy's been long from about the same point. We've rolled futures positions. We both kept physical gold for this long and longer. And it seems stretched, but I can't find a fundamental reason to sell it yet. So what do the charts do?
Well, see, you guys are better traders than I am. We were bullish gold for quite a while, but we started turning bearish right around 3,000, as we all know. It kept going. So we got we had a couple stressful days here and there, but ultimately we actually have survived. And every rally we continue to sell into. In fact, we went short yesterday with options. We do it a little different than you guys do it. We sold. This isn't a recommendation. I'm just kind of giving you an educational.
None of this
idea.
is a recommendation today from Carly. Okay, that covers
no recommendations. But we sold December calls somewhere in the 4,000 strike, and then we used that money to buy put spreads, 32, 3,300 and below. So the idea is I remain bearish gold. I know I'm the only person in the world that's bearish gold, but when I look at the chart, I do see a potential of a retest of 3,500. So I can't rule that out. In the short run, we could easily see those types of numbers, but in the long run, I think this is a sell the rallies market for a couple of reasons. I also am kind of the one person in the room that thinks the US dollar is bottoming. If it hasn't already bottomed, we're probably close. We might go down and retest lows, maybe make slightly new lows, but I think the dollar has a tendency to move higher this time of year. I posted a chart to social media, so if you have some time, you can go check my Twitter page. And there's actually, Jim Cramer shared the chart on his show last night as well.
Who? I'm kidding. I'm kidding. Go on.
Basically, if you look at the dollar, and I'm talking about the dollar index future, it is exactly to the T behaving the way that it did during Trump 1.0. We're just repeating history. And if history continues to repeat, we should be finding a pretty good bottom here and rallying up to maybe somewhere around 110, believe it or not. So if that occurred, it's going to be really, really difficult for metals, even stocks, and for most commodities to really make any gains from here. So that's my big premise. Chart wise, if you look at a monthly chart, and again, I've shared this to social media, but I can do it again after the show. We are basically, in my opinion, repeating the 2011 market. Anybody that was trading gold in 2011 remembers what happened. It was one of those situations where, the world was melting down. Global financial crisis was, we were just getting over it, but everyone was still nervous. Gold was really popular. All the central banks were buying. Everyone wanted to be long, very similar to what's going on now. And we had 3 big wave rallies. And on the third one, it just kind of it went off the charts crazy, parabolic, and eventually gave way to a 10-year 50% correction. I don't know if we get something quite that devastating, but I think we have a really good correction in store for us.
Is this the one, Carly?
That one doesn't have gold, but that does have the dollar index on the lower left. So you can see,
right?
Yeah, there's a blue box on the left, kind of the middle of the screen. That's Trump 1.0. And you can see the market rallied as he was coming into office, and then it just completely melted down, roughly 15 points, which is exactly what we've gotten this time around. Kind of crazy how markets repeat like that. And so if we are repeating that, we should get a nice little digestive rally, probably up to the top of the range around 110.
And what currency would you be selling most against it?
So the way we're playing this now, this is we've kind of gotten beaten up a little bit in the way we played it. So we all know the dollar index futures are a little on the thin side. I don't really do futures. I do options. The options are pathetic. You just can't trade dollar index
That's
options.
why I asked the question, because I don't like to trade dollar index options, and
Yeah,
I
I
want to
don't
short
blame
the
you.
euro. Yeah.
Yep. So we actually have option spreads on in the euro where we're short calls and long put spreads. We also our gold idea, like I just mentioned, we're short calls, long put spreads, and gold to play it. We kind of made the mistake of playing the downside in copper because of this premise, thinking that if the dollar rallied, copper would go down. And about a week after we put the trade on, again we were short calls, long put spreads. Trump announced that he was putting a 50% tariff on copper, and we all know what happened there. So we've kind of been forced to adjust. The great thing about trading options on futures is there are a lot of ways to hedge. Luckily, we were quick enough to buy micro futures against our short call. We're still losing good money because the option volatility has exploded, but we're hedged pretty nicely. If it goes up, down, or sideways, we're pretty much fine. As we just need volatility to come back down, but we are still net bearish copper.
So when you talk about, well, first of all, the option strategy that you described, there's a name for that. Can you tell people what that is for people who don't know?
Right. So it could be called a bear put spread with a naked leg. It really depends on what part of the country you're in. If you're just selling calls and buying puts without making it a put spread, a lot of people call that risk reversals or collars. So we try to keep it simple. We just say we're selling a call to use the market's money to buy a put spread. Yeah. You can call it anything you want.
I'd call it a risk reversal with an extra put, which is funny because we all look at it a little differently with selling an extra put. Yep. Right. So, yeah.
I mean, just in case this isn't obvious to your listeners, options are eroding assets. Most of them expire worthless. So our goal is we don't want to spend a ton of money on options. We'd rather use the market's money to pay for those options. So that's why we do it this way. Of course, the downside is when you're selling calls to pay for a put spread, you have unlimited exposure on the call. So you have to be careful with that. If the market gets up to your strike price, in our case, we were short $6 December copper calls. So you can imagine what that felt like. It's like being short a futures contract from $6 if the market gets up there. So what I like about it is trading is a mental game, right? The idea is to basically not put yourself in stressful situations that create an overreaction or a bad decision. And those things can still happen, but we have so much room for error that we generally have time to react and adjust and handle things if we're wrong. So that's why I do it this way. Everybody has to find what works for them. It may not be this way. Maybe something else works for them.
We've got some comments that I want to just put up real quick before they start piling up on us. Barry reposted the stream. Thank you, Barry.
Thank you, Barry. They're the man.
Appreciate that. Also, we've got a Hey Carly from its stock charts. We all know Remo pretty well, right? And actually, Luis, if you could share my screen again real quick. Remo put up a chart on Twitter. I'm watching Twitter on the side here, so if it looks like I'm not paying attention, I am. But he put this GLD monthly, which kind of seems like we might get a pullback up against this channel. Looks like it goes all the way back 2009. It's not exactly how I would draw it, but it's certainly valid based off of the price action, I think. Carly, did this give you any thought or just kind of back up what you were thinking anyway?
Yeah, no, this is the same general idea. Now, the futures chart's quite a bit different.
It is
a little more parabolic than what you see there. That looks pretty tame, to be honest. But but it's generally the same idea. And I will say, before we go any further, I also want to mention, like as I logged in, there is a button that says click here to touch up your photo, and I clicked, and I shouldn't have clicked. I can see it's like it's so. It looks like one of those fake filters. That's crazy. I wouldn't have done that.
It looks exactly how you normally look, and
I chose subtle. No, I chose subtle, and it's making me look like I over. That's crazy. Anyway,
slightly untrue. You were wrong about this.
The one thing you're in the movie
maybe gold
right now. That's how it is.
Gold. If your time horizon in gold is 30 years, by all means, buy, hold, and just ride it out. Right? Gold generally goes up over time, but the problem is. Gold is the kind of market you don't want to be overly long or buying. I mean, if you're long and you're moving stops up, that's one thing. But I wouldn't if you're on the sidelines, this is not the time to buy gold. The time to be aggressively bullish gold is when nobody else wants it, not when everybody wants it. And I know that sounds counterintuitive, but that's generally just how this market trades. I wouldn't be shocked to see, I'm going to throw some crazy numbers out there, and people get mad when I throw these out there, but if this is a repeat of 2011, like I think it probably is, gold could easily give back this entire rally from the breakout around 2000. So we're talking like 2100, 2000 in gold is not out of the question. I'd be super bullish if we got there, but if you are long, make sure you're protecting yourself.
Bob, is there a way we can look at just the 6-month chart of gold? Because I'm going to try to talk both of you out of the gold pullback thing. Is it possible to get that up or no?
Yeah.
Because I see this 2-month consolidation period that I think has worked off a lot of the fervor. And I
want a weekly, a monthly? What do you want?
Just a 6-month duration daily.
Yeah, I got it right now. Hold on.
Okay, good.
Yeah. I would say probably most people agree with you, Jim.
No, and I know that, but that makes me scared. You know what I mean? I'd rather be the one standing shouting alone, getting at first run over by the herd, but then ended up being right. That's my sweet
spot. In the meantime, Luis, there's John the Recluse's comment. I want to put that up because it's specific to Carly. Hey, to Carly, Brian says hi.
Okay.
So I'm sure you know who that is right away. Pluton Capital Management says, methinks at least 10%, maybe more. I assume he's talking the dollar because that's when that came out. So I think he means 10% higher from where you said, maybe more. And then Lonnie Smith, it seems like Lonnie might know you as well.
Lonnie.
Tim, we're gonna get to that, Tim. I'll put up your comment in a second. Luis, can you put up the gold chart that I just put up for Jimmy to talk me out of the ledge?
Yes. Okay. So here's what I see. And again, I see that it failed at that, obviously a serious resistance level, which, what do we call that, Bob? Yeah, right there. 34.75, let's call it. So it failed there. And if I had a gun to my head right now, I would be short this instead of long it. And I am long it. But a settle above that line and then any subsequent strength, to me, it looks like it could be a significant breakout. My question to both of you, particularly Carly, I guess, is if that happens, would you change your thesis on gold, or is it based more on fundamentals, or what is it based on?
Well, the nice thing about option trading is you have some wiggle room, right? And so if we start printing above 3,500, I agree with you. Once you get, and we've seen it over and over this year in the commodity, actually, let's say the last 5 years, basically since the COVID stimulus bazooka, markets have been just runaway markets have kind of been the norm, not the exception. So it happens. So we're prepared for that. If we do start pushing up above 3,500, what we'll do for our strategy is we're not going to necessarily change our mind or change our analysis, but we're just going to change with the market how our strategy will play out. So what we would do is buy back our short put. At that point, if the market's higher, it's probably going to be making some money. Now, I will say, if volatility explodes and something wild happens, sometimes we're in a situation where the market goes up and the puts don't lose value. So that extra small hedge that we have in place with our short put of the put spread doesn't always lose value. We just experienced that with copper. As copper was moving up, our short call was exploding and our short put was actually gaining in value. So sometimes you see weird things like that. But in normal circumstances, we'd be able to, again, just as a reminder, we're short a call, we're long a put spread. So we're long a put and then short a put underneath it. If the market rallies, we buy back our put and then we buy micro futures, 2 or 3 against our futures contract. And what it turns into is we're still bearish. Like if the market rolls over, what we make back on our short call and what we make on our long put is going to outpace any losses on our micros. So we're net bearish. But if the market goes up, it's no big deal. We can actually make money on the way up as well. We just keep kind of adding to our micros to get it delta neutral and play it that way.
So maybe you make a great point, and I may put on some hedges on my position as well. The only thing that I'd throw at you from a fundamental standpoint is that M2 money supply has recently had a dramatic rise to all-time highs. I look at that. I keep that chart up every day. The Fed's balance sheet isn't being drained as fast as it had been before. Only $5 billion a month now, which in my mind is like the precursor to easing. So I am still worried that we're spending too much goddamn money, which is what I voted to not do back in November, and we still are. But again, I know tariff money's coming in. There was a month where they're claiming that we had a surplus, but we all know that was probably a tax collection shell game. But anyway, Bobby, back to you.
Yeah. Yeah, real quick, I want to go to Tim's. Tim's got 2 questions in there, but I want to jump to his second question since I've got charts up real quick. Tim asks, does Carly think silver pulls back too? So I put up a quick silver chart. Let me get rid of my little buy level here, which this was for a trade that I did. So
Yeah. So my thesis, now I'll start by saying I don't follow silver as much as I follow gold or
neither
copper.
do I.
I
I
don't
do.
I don't even really touch it, to be honest. We rarely touch it. I've seen people make a lot of money in silver. I've never seen them actually keep it. It's a really awful market.
All my biggest losing trades have been in silver. Go
Yeah,
ahead.
I learned my lesson too many times. I just don't touch it. But I do look at it occasionally, and I do hear a lot that gold has been outpacing silver, and so there's this big kind of narrative that silver has to catch up with gold. I'm gonna beat this dead horse. Just like 2011, it was the opposite. Silver was outperforming gold, and everybody thought gold was going to catch up to silver, and so that was the big play. But actually, in reality, what happened is they both rolled over together and they both sold off. And I think that's what is going to happen this time around. So again, I know it's contrary, but I think gold rolls over and takes silver with it, as opposed to silver catching up to gold.
By the way, we have breaking news. You guys know there's reporting right now. Google reports, right? They're down 1.5%. Tesla reported. Were those the two today? Am I right? That it's
Google and Tesla are the big ones. There's other pretty big companies, but Google and Tesla are the big
Google and
ones.
Tesla make most, because I think Tesla, I don't know, the way I read a headline that made it sound like it was getting walloped. Tesla's only down $1, which is 0.25%. So forget about it. Anyway, breaking news is nothing so far. Yeah.
I'm so boring. I'm long Target.
Target's not boring. Target's exciting. Making money is exciting.
Yeah.
You want to see boring, you should see my personal portfolio. I'm like all treasuries. So.
Honestly, like this past week, I bought Cleveland Cliffs, sold it at a profit, and then I bought Target. It's literally like the 2 most boring industries. Right?
Okay, so you want to put up another chart to potentially trade? Because again, I make this. It's an equity Hive, HIVE, and I did after the rejection of the highs today. I put in a buy stop to buy it. I am not licensed to recommend equity trades. I am futures licensing only.
And Carly's not recommending any either.
We're not recommending any trades.
I think you should all buy Target now that I'm long it.
So what do you think of a stop to buy? Oh, there you have the 200-day there, and you're going to set up and buy it till it clears it, right?
Well, all I would say is, I mean, we have several. We don't have any tests of it yet, so that's sort of what bothers me about it. If I can I jump back to something, and I'll come back to this real quick.
Forget about it. I just want to know your opinion.
Well, no, it's okay. It's like, and Carly, feel free to chime in if you want, but we know that this isn't what you do for a living, but you still know your shit. When you look at the Cleveland Cliffs trade that I
that's
did,
a gorgeous pattern.
Yeah, it was a breakout above the 200, which is why I stuck in it. I actually bought it down here at the blue, and I was going to exit at the 200, right? But then it gapped open. So I didn't. Obviously, I left it because it gapped open above the 200.
I know they say it's better to be lucky than smart, but I'd rather to be both. Yeah.
So let just for my perspective, the 200, I don't see the 200 as God, right? Especially a flat 200, right? It's not a steep 200, but the 200 matters. I mean, I wish it didn't, but it does. Having said that, I think the momentum for this particular stock is higher, but that 200 is something we need to clear. And then the next thing I would do, Carly, jump in anywhere you want, unless you're like, I don't want to talk about stocks. Is I go to the weekly and I look at the weekly, and we're struggling against the 50-week as well.
How did you know that? Did you just know that offhand?
From the daily price action, I can sort of guess that the weekly would be struggling as well.
Nice work, right?
Yeah, I've been doing this a long time, Jim.
I know you have.
Carly, you pass?
Yeah, pass.
Okay, pass. So let's go to Tim's next question then, Jimmy, if you don't mind. Tim McLean asked a question prior to his silver question, which was, do you have any thoughts on oil? And since we got my chart up, I'm going to go ahead and put that up.
Is this for me?
Yeah.
Yeah. Okay. I do. So historically, like if you look at the last 25 years, oil has had very pivotal moments right around $65 a barrel. We've only traded below it a handful of times post fracking era. And in each of those times, once it broke below 65, we literally went to oblivion. The first time was financial crisis. We went to the 30s. Later, we went, I think it was 2014-ish. We went into the 20s. And then, of course, in 2020, we went negative. If technically the front months were $10 to $15. But anyway, people like to say negative oil, so I repeat it, negative oil. So the point is, below 65, things get really, really ugly. Now, we were below 65 earlier this year, and we popped up above it. It was kind of a stick save because Israel and the US were dropping bombs in Iran. Had that not occurred, we probably would have continued to dribble below 65, and it probably would have become very heavy. So now we're coming back and retesting 65. What happens here matters. I personally think we break through 65, and I've been saying this all year, and of course it's taken the scenic route, and maybe I'm just dead wrong, but I still think at some point within the next year, we're going to be seeing low 50s, probably high 40s in oil.
Bobby, can you give your take on it too?
So, this is the thing I trade the most in the future space, right? Is crude oil. I never saw this 65 horizontal line before. So Carly just mentioned it. It's just not something I ever looked at. My view, somebody asked me recently if the fracking break even has dropped. And my answer was, yeah, to about 65 in aggregate, right? In the US, 65 is about break even now, which it used to be a lot higher in aggregate. There's places that's 45, there's places that are 75, but this really is, like, I'm sort of speechless at this because this is important. This is an important thing for people to notice because crude oil, unlike other commodities, matters to everyone every single day. Copper doesn't necessarily matter to my cousin, right? Who maybe he's not building a house. Crude oil does, right? Crude oil is critically important. And if it drops like this, that is the sign, on top of some of the other signs that we've shown, that the economy is slowing dramatically. You see the gasoline prices, the demand on the gasoline has dropped dramatically as well. You look at a recent study, I don't remember who did it, but I was reading it 2 days ago. The gasoline demand has fallen off a cliff with the summer heat, right? And people they're just staying in because we've had a really hot summer. Now, really quick, for those of you climate people out there, there was a volcanic eruption. So I'm just saying, it could be that.
We should ban volcanoes. Ban
volcanoes. No, but I think that's critically important. I would agree on a technical basis that we're going lower. I think on a fundamental basis, we're going lower as well, because OPEC, specifically Saudi Arabia, they're about to flood the market with even more than was expected. And demand in the US in the summer driving season has fallen off a cliff.
Can both you guys give us where the trade triggers? Where do you get short that, Bobby? What has to happen?
Well, for me, you have to see. All right. So everybody that's ever watched us has heard about the rotation zone, right? Mm-hmm. The rotation zone is the 8 EMA and the 21 EMA. Okay. And they have to cross, which they did here. I don't do moving average crosses. I don't think anyone should do moving average crosses. But as they start to angle down and widen, and for those of you watching this as opposed to listening to it, the 8 is the orange one, the 21 is the blue one. They have to cross and they have to start to angle down and widen. That's what's happening here. Okay. So if I were to take this and I can't draw on this, can I? I think I could probably draw on this, but I don't know how to, so I'm not going to try now. If you take these two and push them down, and then we get below 65, and then crude oil jumps back up to that 65 area, to this 50-day area, and to the rotation zone day area, and then drops again, I'm short big. So the rotation zone is called that for a reason. The price has to move into it and it rotates back down, especially after a first cross. So like a similar move would be this one here. Okay. The 8 and the 21 crossed. They moved lower. I'm not short. Moves up into here. I draw a best fit trend line right about here. Okay. Just a rough trend line. When we close below it, that's my trade. Okay. This move down here.
Quick time out before, because Carly, I want to get your take on that too, where you triggered as well. But there's two things I'd like to say real quick. First is going to be, if you guys, Bobby and Mike Arnold's technical analysis Took me about a year to understand what the hell they were talking about. And once I did, I use it exclusively. It is genius. And that's why I partnered up with them at unfilteredinvestor.com, because I use it not just for trading on the short and medium term. I do it for portfolio adjustment for in my long-term portfolios too. And I think it works wonderfully. So you guys, please just check it out, unfilteredinvestor.com. Also, it is halfway through the show. That's where I ask a bigger favor of you. Luis, can you put the banner up? Can you guys do us an enormous favor and try Tradier Pro options trading system for 3 months for free? All you have to do is scan the code there. We've talked to people who've been trading options for their whole career, or people who are just starting out. Everybody who tries it said it is intuitive, it's great, it is a perfect system. So please, you guys, give it a try, and there's no obligation to stay with it. They just want to see if you like it or not, and we're helping them reach that goal. Thank you guys very much. Back to you, Carly. Where do you short oil?
So we have a different approach. So basically, my overall premise, like I said, is we're probably going to the high 40s. And so with that in mind, we've the last 3 years, every rally's been sold into, and we've gotten a little lower each time. So when we have a big trend that we have a lot of conviction in, we try to always keep puts in place. Puts have been cheap relatively throughout most of this 3-4 month period. So we basically, let me just put it this way, when oil was like below 65, we were buying cheap puts because we didn't want to have any call exposure. We didn't want to have unlimited exposure on the upside just in case something happened like it did in the Middle East. And then once we did get that large rally, we were able to sell calls and buy put spreads. We've since bought our calls back. We're holding put spreads, so we're pretty comfortably with limited risk plays. I wouldn't get aggressive on trying to play the downside. Just the way that my personality is, I like to sell on rallies. I don't like to sell in the hole. So it's just a little different mindset. So if we popped up, let's say we got a $5 to $10 rally from here, I don't think that's going to happen. But if we did, we'd sell calls and buy put spreads. If it just keeps going lower, we're already in place. And at some point we might find, if we think the market's going lower, we don't want to miss it, but we don't want to have unlimited risk on the upside. We'll do like a put butterfly, buy a put, sell 2 below, and then buy 1 below. And so that we have something on.
Bobby?
I just put this up real quick because Widge asked to see the silver chart going back to 2011. So while Carly was dictating the way that they trade options around that kind of a trade, I just wanted to put this up. Yeah, so we can stop showing the chart now, Luis. So Carly, from a perspective of what you're talking about with the options market, that makes sense to me when you say that you have a little different approach, because my approach as an outright trader, for lack of a better phrase, right, is to take a section of a move.
Yeah.
Jimmy's heard me say this before. The way I always describe it is when I leave a restaurant, I only take my doggy bag. I don't take everybody else's. I take my segment of the trade, and my average hold time, it's actually down now, Jimmy. It was 26 days. It's now 24 because of some of the rapid moves we've had to targets. So when you're looking at options trades, how do you sort of discern the expiration? And Jimmy, you can jump on this too, because you trade options a lot.
So when you're trading options, there's a couple things in addition to what you're doing. You're just trying to catch the price move. With options, we're also paying attention to volatility, and we have to contend with time value erosion. So there's a couple little extra nuances there. So generally, like if volatility is low, we really will never sell naked options, because I've learned that lesson enough to know don't do it. Like low volatility eventually becomes high volatility, and you're just stuck. And for a small amount of money that you collected, it's not worth it. So if it's low volatility, we either just leave it alone and wait for an opportunity, or we'll try to buy cheap options somewhere or butterflies so that we have some exposure because we feel good about this particular trade. But as far as like time horizons, when we put out a recommendation, it really just depends on what we're looking at. For example, if it's a big trend that we're trying to catch and we have a nice spike in volatility and we could get a nice trade-off with lots of room for error, we're usually doing 80 to 120 days to expiration, but our intention is probably to only hold for maybe a month at the most. Sometimes if we're lucky, the market immediately goes our way, and like a trade that has a profit potential of, I'm just kind of throwing numbers out there, but let's say a trade has a profit potential of $7,000 And in a week, we're already making 2 or 3. We'll just take it off the table and not even ask questions because of the risk reward prospect. So there's no, we deal in areas of gray, not black and white, but usually we're using options with at least 60 days, but probably more like 90 to 120 days.
So can I add some of the cards? And one thing I love what you said is that whatever the 180 days you said, but then you generally take them off in a couple months. And because I think I'm speaking for you right now too, it's because if you continue holding them, then the clock starts ticking and you start losing money in your sleep as it accelerates closer to expiration. I love that. For me, excuse me, if I look at the chart and think the chart is moving somewhere, then we all pick our time frames of when we believe it could get to that spot. So one is how long do I think it'll take to play out? And if it's 3 weeks, I play the 3 or 4 week options. And then 2, what events could be a binary that'll keep volatility in the market till after that event happens. And there's lots of ways to play that. If you think it's going to be a nothing burger and the market is, God, I hate saying nothing burger. I'll never say that again. Sorry about that. If you think it's going to be nothing in the market, if you feel like people are having to hedge their risk and buy options and you're getting a good deal, then I'm willing to sell some in a hedge sort of strategy against them, but at least to be cognizant of the binary events. I have Google options on right now that was hedging my long position going into this earnings. And that's one of the reasons I was checking right now. I have sold a call, bought a put spread, just like Carly had done it against my Google position. And so right now I assume that my call is getting completely sucked the value out of it, which I'm short it. So I'm glad of that. And the put, it's going lower, but not precipitously lower, but hopefully the top put is gaining some value and the lower put's losing because the put skew will come in if the binary event is gone. Does that make any sense to anybody besides Carly? And yeah, it makes sense to you, Bob, right?
It does. Yeah. I mean, I've known you long enough to know,
Yeah.
You know, in a general way, how you do it.
Right.
One of the things, I mean, you know this, the only time I really ever use options, especially in equities, is to sell covered calls. That's pretty much about it. It's probably what I'll do in Target if it continues to rally higher because I like the consumer. But I do want to start getting more involved in them. My issue is, and which is why I asked you the question I asked Carly, is I when I buy outrights, I know exactly where I am on the chart where I'm wrong. Right. It's like, this is a spot I'm wrong. And I always think to myself, why don't I just stop myself out and, you know, save myself for another day? I haven't figured out how to incorporate that mindset into options yet.
You know, and maybe options aren't for you. I run into this a lot with retail traders that I'm working with. Options are not for everybody. Some people have a very black and white mathematical mindset, and they want to know exactly what their risk is. I mean, minus maybe some stop slippage, but they just need to know the absolutes. And when you start working with options, there's some fuzzy math because, you know, at expiration, you can calculate everything to the dime. But if you're talking before expiration, it gets a little messy and some people just can't handle it. And so if it causes anybody stress, then options aren't for them because they're, again, I'll say it again, stress makes people make bad decisions. And if you're putting yourself in that situation, you're already behind the 8 ball.
That was Carly's way of saying I'm a simpleton, and I tend to agree with her.
It's just a difference.
No, I agree with
it's personality.
I agree with you. She'll
Can
say
we
it
look
to me.
at- can
She'll
we
say
look
it
at
to my face.
Bitcoin?
She doesn't want to say it on air.
Can we look
Hang
at
on,
Bitcoin?
I want to throw one thing out real quick because I hadn't heard about this, Jimmy. I'm sorry.
No problem at all.
We should go to Bitcoin. Tim wants to know what we think of L. Arian and Jeremy Siegel recommending that Jerome Powell resigns. I assume that's for everybody. Luis, I put up an article because I hadn't heard this. He's talking about Powell should resign to preserve the Fed's independence. And part of it in the article, as I was reading it, basically points to the transitory mistake that the Fed made. And then something Mike Singleton said this morning, Jimmy. I don't know if you
I did hear it, and I've quoted it twice as if I made it up. Sorry, Mike.
Go ahead. Something Jimmy said earlier. Go ahead, Jimmy.
No, he said that John Williams, is that his name? Williams came out and gave a speech when he talked about that the Fed is worried about inflation rearing its head and stagflation coming back. And he also gave the statistics of when the Fed last cut and where unemployment was, where inflation was, and now them completely telling us that they're data dependent dependent, but at the same time saying they think this is what's going to happen, which that means they're forecast dependent. So what is it going to be? And Mike Singleton was very clear that he said it lacked integrity, a switch like that. And I agree. I'm not a big fan of the Fed, but I will say I am not a big fan of the president bashing the Fed over the head with a sledgehammer every time he can't do. And I am not a fan of if they're trying to get him for putting crown molding in too many rooms in this new Fed thing. And I have no idea what a Fed building costs, but if that's what they're going to bring up criminal charges again, I'm going to be very vocal against that. So eventually I'm going to get put in a re-education camp. Carly, what do you think?
Well, let me say this. I graduated from UNLV, not Harvard or Princeton. So
that, by the way, way to pat yourself on the back there. That's an attaboy for you.
They are obviously smarter than I am. But I will say the Fed has a very bad habit of, they even say it, they're data dependent, which means they're using information from the past to make decisions. Well, that information's not only lags, but it's probably late. I think they should try skating to the puck a little more as opposed to, or where they think the puck is going to be as opposed to where it was. That's my opinion. I think they need to be a little more proactive, but then again, we might be opening a can of worms because most people are very, very bad at speculating. So maybe that's even worse. I'm not sure, but it's hard to imagine they get a whole lot worse than what they've been.
I agree. They do not have a good record as prognosticators. And Bobby, do you agree with me when I say in 10 years, when I will talk about this Fed, I will say it was largely a failure. They missed what was a pretty easy sign in June of 2021. And they did the exact wrong thing. I'm not saying they're bad guys. I'm not saying they should all rot in hell. I'm saying that they had a really, really important job and they didn't do it very well. Sorry.
I'll say this. We're way dumber than you, Carly. And this is show number 102 of this show. And our regular podcast is in the 400s now. And Jimmy and I were both saying, what are they talking about? Transitory. It's not transitory. You can see the driver of it in the economy. What Alarian is saying in this article, if Chair Powell's objective is to safeguard the Fed's operational autonomy, which I deem vital, then he should resign. And I think that has something to do. We talked about this last week, Jimmy, or I personally think Trump's getting his rate cut one way or the other.
Oh, yeah,
he's going to get his rate cut by hook or by crook. Yes. He's going to get his damn rate cut. And the thing Mike Singleton brought up this morning that I thought was really critical is the Fed cut rates 100 basis points when inflation was 100 basis points higher than where it is now.
Yeah.
And we've got the Fed interest rate about 100 basis points above where the Atlanta Fed GDP marker is. So I think if he stays and continues to push this, he's going to be deemed political by the right, a hero and an anti-Trump person by the left. And we're going to end up with a Fed that just goes to mathematical formulas as to when they change rates, which is probably an improvement.
Yeah, we could give them inputs, right? If the three of us took it over right now and algoed the shit out of it, it'd be a piece of cake. We'd pick the top 20 indicators, and we also have resources to, it's like, what are the top 20 indicators that Brian Westbury, Jim Bianco, all these guys will get the best minds who aren't necessarily poisoned by the Harvard education, and we'll algo it and say, when this happens, you ease, when this happens, you hike. Does you agree with that, Carly, or no?
I do. I'll also add the economic numbers obviously look very solid, but I feel like they're very fragile as well. So like on the surface, things look great. I'm not so sure under the surface they're as good as what it seems.
I agree.
And I remember this playing out similarly. I'm not saying we're on the edge of a financial crisis, but it was kind of the same play out in 2006, 2007. The Fed was they raised rates. There was an interest rate hiking cycle. The market didn't care. The economy didn't care. All the assets inflated, including houses. Exactly what we're seeing today. And eventually, the higher rates were kept for a little too long, a little too high, and we started to see who was swimming naked once things started to crack. So I think we're really vulnerable. Maybe not such a dramatic repeat, but I think that all the good news is priced in, all the positivity is priced in, but we're probably have rates a little too high for what's going on under the surface. There's a lot of leverage out there, I guess is what I'm saying. If you look at consumers, they've got credit card debt, they've got everything leverage. I'm not kidding you. People call me to buy Bitcoin or Ether futures, but then when I tell them they can't fund with their credit card, they hang up and call the crypto brokerages, which will take credit cards. So there's a lot of things going on here that I think leaves us vulnerable to a deleveraging cycle.
Wow. Bobby, you got some comments?
Yeah, I do. I'm just asking Luis which ones to put up first. I just tell you, Luis, let's start with Widget's compliment to Carly's assessment of my options idiocy. Luis, can you put up Widget's comment real quick? Widge says, love that answer. Options aren't for everyone. I think people figure out options aren't for them after they crash out, but most financial ads make it sound easy. Carly doesn't make it sound easy. So for anybody who's listening who wants to understand options and has no clue what to do with them, she's one of the people.
But Carly, will you agree with me that like you can be taught gamma in the classroom, but until you get your ass handed to you, then you're finally like, oh, that's what gamma is, right?
100%. And I tell people that all day long. I try to explain to them, you only learn if you feel it.
Yeah, it pounds it right into your skull. We used to say, I can't remember what we called this mythical Greek that just meant no matter where the market goes, it's going to screw you with the option. It was epsilon. We just got epsilon.
Yeah, it was epsilon. It was epsilon. Yeah. So I want to throw up a Tim and a Lonnie comment that are basically about the same thing that Jimmy mentioned. Tim says the Echo's budget, building budget amounts to $9,000 a square foot.
Okay, but whose fault is that, Tim? Is that Jay Powell's fault? Is he going over plans? Well,
Probably
I don't know.
not.
Yeah.
I have an article right here that was I printed it out because I'm old, and it's an excerpt from a New York Post article that said the electrification of the United States Postal Service fleets right now is $6.8 million per electric truck.
Good for the government.
Yeah, $6.8 million per truck so far. So I think overall the government does things terrible. Lonnie said that the remodel is costing about what an average football stadium costs. So
yes,
again,
Lonnie, I agree with you too. But is it Jay Powell's fault, and should he be perp walked because of the overrides? Somebody should be. I just can't imagine he's meeting with architects. What am I missing? Yeah.
And I want to put Doug's comment, and I want to speak to Doug's comment if I could, and then you guys feel free to chime in. Doug says, speaking as a sane liberal, which he has been in the past on the show when he's brought up comments, speaking as a sane liberal, my hope is the Fed is independent of the White House. My hope is that too, Doug. And what's bothering me is the inconsistency of Fed actions over different administrations. I don't think Jerome Powell is sitting there going, we're going to really stick it to Trump this time. I don't think he's doing that. I just think that Jimmy put it best, and I think Mike from Invictus stole it from Jimmy. The Fed is not data dependent right now. They're forecast dependent, and that's bad optics is what that is. Anybody else?
No, I agree with you completely. And I think it's very, very nuanced, Doug. And I hate what the White House is doing. I want the Fed to be independent of it. I want the Fed not to suck, though. And I think they had an opportunity and they swung and missed. So, I mean, it's not, again, and that's not emotion. It's not any sort of political bias talking. I think it was a big miss. Carly?
Agreed. As you said, their track record's a little shaky.
I said they sucked. You said their track record is a little shaky. So that's the balance that Carly provides.
He's just one of my favorite people on the planet.
Can we look at a chart of Bitcoin and break that down? Because and
then I want to ask Carly about Russell too, but I want to put up Bitcoin first.
Okay. We have enough time for two.
Do you want the futures? Do you want what do you want?
It doesn't matter to me.
All right, I'll put up the futures.
Yeah, I know there's not a lot of storage costs for Bitcoin.
All right. What's your question as I put it up?
So there's a little bit of a flag that seems like it's forming again. And I'm thinking, okay, that to me looks like it could be the fuel for another bullish leg higher. And I can't decide what my level is, or I want to jump in again, which I probably won't, because of the price action, I'm up to my eyeballs in Bitcoin right now. I wanted it to be like 1 or 2% of my investable. It's like 3.5% now because of this recent rally. So you see what I'm seeing, right? What do you two think? Carly, let's start with you.
Nobody should take my opinion on Bitcoin. That's all I've got to say. I've ignored this thing. I keep thinking it's crazy and it just keeps going. So what the heck do I know? The only thing I will say though, from a brokerage standpoint, I think we can all kind of agree that it's value. The market says it's valuable, but there's not a lot of intrinsic value. And our risk managers, like at brokerage firms, they restrict people from trading Bitcoin, not just by margin, but there's usually some additional padding or contract limits, because in their minds, Bitcoin can go to zero overnight, over the weekend, and just leave everyone left with a bag holder. As a bag holder, there's no price limits. So I think it's, don't listen to me. I have no idea. I've missed the whole thing.
I actually think it will go to zero. I
think it will too, but
in
I
case it
thought
doesn't, I'm on board, Bobby.
Yeah. Well, you see, you played it better than me. I just watched it.
Yeah, before I put up or before I talk about this, I want to put up Tracy's comment because Tracy has graced us with
we
her
love
presence.
Tracy.
Yeah, we love Tracy. I hope Tracy didn't hear me say Carly's my favorite person, because Tracy's my favorite person. Depends on who I'm talking to.
You can have two, but
we
only
have two, right?
Yeah. So the Bitcoin price action to me looks like what Mike Arnold calls sideways consolidation. And I don't know that it's overbought enough to collapse. The problem I have with Bitcoin, I still have it, which is why I own some, I trade it, and I don't necessarily have a very large position in it. I don't have the same issue as you, Jimmy. I've been buying it over the years, but I've sold quite a bit as well.
I've never sold. Yeah.
Yeah. I trade it more often than I buy and hold it. And that's because my belief is it goes to 1 million or it goes to zero. If it goes to 1 million, I'm good with the amount I have. And if it goes to zero, I'm good with the amount I have. And I agree with Carly that the intrinsic value still escapes me intellectually. I can't quite figure out what the intrinsic value is.
What are you guys saying? We all agree that we can't figure out what the intrinsic value is of the Honus Wagner baseball card, of the
I know what that is.
Of gold for some reason, which is trading 35. We can't figure out what the intrinsic is of that either. It's all just an agreement of what has value. It's not flour and water. Carly, comments?
Humans are crazy creatures. We're not always logical. I'll leave it
exactly. And our job is to find the lack of logic and capitalize on it. Bobby, you want to do the Russell?
In reference to the Honus Wagner baseball card, I also don't own that.
Yeah. But you would, if you could get it for $5,000, you'd buy it in heartbeat.
Yeah, I would buy Bitcoin now. I would hold it at like $300 right now if it went back down there. Yeah. I would hold a lot of it. For me, the problem I have with Bitcoin, again, is I don't think the Honus Wagner baseball card is going to 1 million. Well, it's already at 1 million.
It's already 1 million, yeah.
I think it's going to zero, but the Honus Wagner baseball card could also be set on fire in a wildfire based on climate change. Yeah. And it could actually be gone, and then that money is gone. At the end of the day, all of this stuff's value is based on the ability to exchange it into fiat, right? Mm-hmm. So that we could spend it. Or, I don't know, buy milk, whatever. Right now, the people who believe in Bitcoin don't own it because they want to change it into fiat. They own it because it's going to be their currency in the future. The owners of the Honus Wagner baseball card are still based on it being changeable into fiat at some point.
Yeah, that's a good point.
That's my issue with it. And, I'm probably wrong about this. I mean, I'm old. But you look at it from that perspective, and I think to myself, okay, I'm going to own some of this, but I'm hoping it goes up so I can exchange it into fiat and use it. Right. And people always say to me, what's intrinsically the value of the fiat currency? Well, it's that the government accepts it to pay my taxes. Yeah. That's what the value is. Mm-hmm. I can pay taxes in US dollars, and I still owe taxes at this point. Now, Trump cancels income tax. I'm all in on Bitcoin. I'm out of fiat. Okay. That's the way I look at it.
All right.
I want to ask Carly real quick. We don't need to put up a chart, or I could if you want, Carly. Russell 2000. It's starting to outperform ever so slightly. What do you think?
So I tend to be a skeptic in S&P, NASDAQ at these levels. I'm not a pessimist. I just think that we're so overheated, and I would love to be able to buy at lower levels. But I will tell you, like I just earlier in the show, I mentioned I'm almost all treasuries in my personal portfolio. I'm not recommending anyone doing that. That's crazy. I spent 4 years in finance learning not to do that, and I'm still doing that. But that's just where I'm at. I'm too old to deal with any risk at this point. I'm waiting for an opportunity to buy at lower levels. And I will say Russell will be the first place I start putting money to work. I did it in April. I was lucky enough to be mostly cash going into April, and I was lucky. I'm not saying I'm a genius. Market came back. I got a nice opportunity to buy. And again, Russell was the first place I started putting my money. Not for any particular reason other than I'm hoping deregulation and lower interest rates kind of helps that side of the market out. And also, if you're talking about S&P and NASDAQ, they're dominated by a couple of stocks, which may continue, but history suggests it probably will.
Okay. I loved having you on the show. That was a ton of fun. Thank you very much.
Thank you.
By the way, do you go outside in July and August where you live or no?
I do. You know, I'm a masochist. I actually go ride my bike after work most days, unless as long as it's 107 and below, I'll go ride. If it's above 107, I go on the treadmill.
And what's
Dude,
how cool is the pool?
I'm sorry, what's that?
How cold is the pool? Your pool?
You know what? Pools in Vegas we still have the heater running a couple hours in the morning, believe it or not. We keep it at about 85 to 87 degrees, and it requires a heater to do that. It sounds kind of crazy
because the nights get so cool. Oh, I forgot about that. Yeah. Okay.
This is actually, for me, Jimmy, the best time to ride my bike. We had 107 heat index the other day, and I cut my ride down by about 75%. Plus, it's humid here. It's not as humid in Vegas, but
yeah, humidity is too much. I don't do that.
Yeah, but it was
We should
100
feel it
heat
here right
index,
now.
and I went for a bike ride, and there's so few people down here now because it's not the quote unquote season that I didn't get hit by any vehicles, which is amazing.
That's fantastic.
Yeah,
The
that was
less you can
amazing.
get hit, the best. All right, I gotta go. I'm driving up to Elkhart Lake, Wisconsin, to go to a family reunion on my wife's side. So it's a fun place up there. So I'm leaving right now. So I want to sign off. Thank you guys for joining us. This has been Tradie Ears, the Trader's Edge. Carly, tell them where they can find you real quick.
Thank you. You can find me on X at Carly Garner or decarlytrading.com.
And if you don't follow her yet, please do. Carly's always a wealth of knowledge. I'm Jim Iuorio. That's Bob Iaccino. This has been Trader's Edge. Please join us on unfilteredinvestor.com too to go more into these things as well. Thank you guys for joining us.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.